All right, good morning, fellow traders, and welcome to today's live session. Thank you guys for coming. We really do appreciate all of you. And, we decided to open it up for those who were interested, who's a part of our Discord group, for some of the free members, just in case they wanted to get a peek inside of what we typically do with this private community. I know today is going to be a busy day for us. Of course, we have today's session, but for those who are actually premium and standard members, we're actually going to have a private war room session later on this morning around 11 a.m. Central Time this morning. So yeah, we'll definitely let you guys know about that, but we're pretty excited about that. We have a few more golden nuggets we want to share with you guys, but with that said, let's move forward and let's talk about what we're currently seeing in these markets right now. And there was a lot of movement, like a lot of different currencies moved. The euro moved strong. The US dollar moved strong. Different currencies moved strong overnight due to some risk concerns. I don't know. We may talk about that later and we may not. But for the most part, we want to trade on the side of momentum. There was some huge moves that happened overnight. I think Jesse caught some of them. Thanks for coming, Jesse. But yeah, what we're going to do is see if we can take advantage of those moves on a pullback or correction in price, because that's the name of the game. Remember, price always makes this move where we see an impulse. It impulses in a particular direction, and then we get the retracement. Impulse, retracement, impulse, retracement, impulse, as some of you guys already know. So yeah, we typically see that with these markets, and what we want to do is take advantage of that particular price behavior. So yeah, that's what we typically do. But let me remove this right here. Okay, so all right, so then now that we're looking at these charts, let's just assume that, hey, it's pretty obvious we should be bearish. There's a lot of bearish momentum to the downside. You could tell by how strong these candles are. These are strong bearish candles, which means the order flow has been to the downside. And you can do the technical stuff. We can see here that we had this ascending trend line support right here. We had this ascending trend line support. Price broke and closed below it. And we're currently bearish at the moment, although price is testing certain areas of structure. So we need to be aware of that. But for the most part, we're not that overly concerned because we see that momentum has been strongly to the downside. We need to look for an opportunity to sell this pair. And if you go to the other time frames like the 4-hour, really we don't have to. But you can see that momentum has shifted to some degree, especially when this candle closes, which should be in an hour from now. We should definitely have a bearish bias for Euro USD on the 4-hour as well as the 1-hour, and even on the daily to some degree. Yeah, even on the daily, you could see it. You can see that hey, if we get this daily closure below this structure, then that's an indication that we're seeing a rotation in price to the downside. But let's go back up to the 1-hour chart, or down to the 1-hour chart, and let's plan our particular trade. So for the most part, what we want to do is wait for price to pull back and correct to a significant area. And for one, I'm going to draw out a few things. Whenever you see price move this strong, then you know that, hey, there's potentially an area or a time where price may come and retest this particular area right here. Let me pull out my template and let's call this imbalance or inefficiency. So there's a possibility we could see price return into this particular zone right here, where we see that there was a huge volume of sell orders, imbalance that came in, and we may see price return into this particular area. And also something you can do, you don't have to do it if you don't want to, but it's something that you could do if you want to, you can actually draw out the waves. So let me quickly do this. So we have this wave right here. So this creates a higher high. Then we have a higher low. And then we have a higher high, higher close, higher low. And then you guys get the point. We can even draw this one. This is like an equal high. And then higher low. And then we can draw in this higher high right here. So what you need to be, what you need to pay attention to is these swing points, these pivots, these anchor points, because this is where we could potentially see the sellers come in at if we do identify or look for a retracement. So the first selling point is right here, second's right here, and they're both within this zone of inefficiency or imbalance. So for starters, let's just identify this as a particular zone of 1 hour structure right here. So right here, we have this 1 hour zone of structure. And right now, we're just waiting for price to correct. We're just waiting for price to give us that nice, solid pullback retracement to retest this area on the 1 hour chart. And then for us to look for an opportunity to sell on bearish confirmation. Now, this is a day trading opportunity. This is not scalping. This is strictly day trading where we're waiting for price to give us, larger corrections and a bigger impulse or expansions in price. But okay. All right, yeah, for some reason they changed our platform a bit. Yeah, some of the stuff I used to look for isn't here anymore. But it's all good. So let me see if I can find something else. I think we did well, go to the heart. Yeah, right here. Go to the heart. And yeah, it's a little bit different, but we may have to add this as a favor. But you guys get the point. What we're looking for is a sell right now. Oh, yeah, right here. So, we'll be looking for a sell as soon as price gets into this zone. But as always, we need to look for bearish confirmation. We just don't need to assume that price is going to rotate. We want to see signs or conviction of price moving in our direction before we pull the trigger. And in some cases, we don't have to look for that, especially if your stop loss is wide enough. I know a lot of people, they just place pending orders right within the zone. They wait for price to get here, and then they anticipate a sell. And you could do that simply due to the fact that we have all this momentum to the downside. And right now, with the way things are looking, we're seeing this shift in bias, and we could look for an opportunity to sell. So it does make logical sense to place pending sales, within this zone or area. But yeah, you can play it safe and not do that at all and just wait for bearish confirmation. So yeah, do we have any questions before we move on? Going once, going twice. Okay, so yeah, I don't see that we have any questions. So yeah, I think Marvin may want to chime in. So I will give him some time to maybe share before we move to the next opportunity. Yeah, I was going to actually share when we go and talk about, the fundamental analysis, what's happening on an intermarket perspective. But I thought, looking at the Euro USD and seeing that it's the most liquid and how, this currency period could really reflect what we see happening today in financial markets across the board. I thought it would be a good time to share the reason for the sell-off. Like, why is there this deep sell-off of the euro? And we see this strong, just move to the downside, and primarily is due to escalation of some banking issues again. I know on yesterday we thought things were settled. We thought that a lot of the contagion risk were sort of alleviated since the Fed promised to step in and ensure depositors with that whole, Silicon Valley Bank issue and a few other banks that pretty much was on the verge of totally collapsing over the weekend. But we see now that the issue has been shifted across the pond to the Eurozone. Right now, there's reports that of course the credit spreads, even for the bank. Credit Suisse Bank is coming under pressure at the moment due to the Saudi National Bank saying, hey, they're not going to serve or fund or finance the bank any longer. So then they're strapped for cash too. So the same situation that's sort of happening or happened over the weekend in the U.S. is also happening there in the European area, in the Eurozone. And we're seeing the euro sell off rapidly and strongly. And we're seeing some risk aversion come back into the market. So it seems as if even when we thought that the road was clear, like everything was pretty settled, that like the Fed was going to come in and prop up the financial market, we're seeing now this issue pop its head up in Europe. And now we're seeing the European financial institutions at risk of defaulting. So then this is the reason why we're seeing this sell-off in the euro, and it's impacting the market across the board, with even futures markets trading lower, and even the Japanese yen also gaining ground as risk aversion settles in for today's session. But I just kind of wanted to point that out since we're on the Euro USD. Yep, exactly. And for those who have TradingView, you can read about it right here. I know this area right here, we have these headlines, and they tell us Credit Suisse woes knock euro, sterling, and Swiss franc. And that's why those are very weak, those currencies for today, the euro, the sterling, and the Swiss franc. So if you want to, you could look for opportunities to sell those, because those are the ones that's being hit hard. But we can read this article in Reuters right here, and all that good stuff. Also, we have some retail sales announcements coming out, in a little bit. So just be on the lookout for that. But yeah, for this one, we definitely want to stay on the side of selling right now with what's happening with these concerns, these fears, especially when it comes to the financial markets and the stability of these banks. That's something that would definitely drive markets. So if there aren't any questions, then we can move to the next pair, which is pretty obvious, which is the pound. Remember, it's the euro, the sterling, which is the pound, and the Swiss franc suffering the most. So really, you could look for opportunities to pretty much trade those. Look for opportunities to trade the pullbacks or corrections in price. We see with pound USD, it looks like price wants to react and move further to the upside. So the question is where? Like, where would we see this move happen? Well, for starters, we can do the same thing, draw out our zones, and what you will find if you draw out your zone is that we have an area where we have structure in this particular zone or area right here, right? We have structure from this high and this high right here that can act as an area of resistance, and where the sellers can come in at. So we just want to sit on our hands and wait for price to come to us. We're not going to chase price. We're going to simply wait for price to come to us and give us what we need to see, which is eventually price testing this zone and then giving us bearish confirmation. So we can see here that the pound is looking quite bearish, and we want to trade it the same way as the euro USD. We'll be looking for opportunities to sell on a pullback or dip in price. Now remember, whenever we talk about these opportunities on the 1 hour chart, we're mainly playing momentum. These are momentum setups. All we do is look for markets that's been moving significantly, either due to a sell-off in one currency or the strengthening or a bounce in another currency. And we can see here that the pound USD is one of them, because the pound has been selling off and the USD has bounced. The Dixie has gone higher. As a matter of fact, let me just pull up this window and you can see it right here. This is the Dixie, the US dollar index. We see a strong move to the upside, a strong push to the upside, which if you know your technicals, you could have predicted that was happening. You could predict and see that price was eventually going to rotate higher. It was going to create this double bottom and it was going to push higher. And that's exactly what I saw even early on. I didn't expect this move to be so strong though. So yeah, I definitely would have been good if I was awoke during the European session and exploited this massive move to the upside in the US dollar. So then the US dollar is still acting as a safe haven at the moment. So you know what you want to do is look for opportunities to buy the dollar on dips. But we see here, see the sell-off. Now we're waiting for a correction on pound USD so we can sell pound USD and we can sell it to maybe this next area of structure right here. Look left, structure leaves clues. Right around here will be a good area to eventually consider closing out. So or at least taking partial profit. So yeah. All right. So yeah, we have this opportunity with pound Swiss franc. And I think, you know, you probably don't have any questions about that. We can go to the next one. I'm just going to hurry up, go through these real quick. We have US dollar Swiss franc. Same thing, same scenario. We had a bounce to the upside, which is really what we were expecting on this pair. Actually, we missed out on our main setup. Our main setup was this correction, and then we was looking for a buy, but you know, I didn't get in, so of course that's my mistake. But for the most part, we're still in a bullish environment where we're seeing this nice explosive expansion to the upside, this nice thrust in price, and it broke through multiple levels of structure. It broke through, for one, this level of structure. It broke through this level of structure, and did it break through this level of structure? Looks like it did. Broke through this level of structure. So this right here is a strong bullish environment, and that's the one thing you should only be looking for at the moment, is looking for opportunities to buy, mainly due to how strong this rally or this push was to the upside. So in the same way, we try to figure out where the buyers are going to come on Euro USD and Pound USD. It's the same way here. You know, for starters, we do see inefficiency right here. You know, we saw it very similar to what we saw with, you know, with the Euro USD. But if you was to draw on your waves, you would see that the most important areas for us to look for or look at right now will be this zone right here. Let me just identify that right now and draw that out. So from here all the way up to, let's do the close right here. So yeah, this zone right here is a zone where we can potentially look for some potential buyers to come in. Possibly we need to see a rotation in price. That's one thing I want to mention. We need to see some signs of the buyer stepping in, you know, if we do get a retracement into this zone. But we can even see a deeper retracement, maybe to this hesitation area right here. There's a possibility, but by that time, price may have broken through our particular level right here. For those who are familiar, what do we call this level right here? If price breaks and closes below that, what do we typically call that? For those who have been with us, let's say for the past 2 weeks. But to give you a clue, if it breaks below this level right here, we want to, and it closes below that level, we want to abort the buy idea, because price could be rotating and we could see a deeper, you know, if price does break and close, price could be rotating and we may see price continue pushing lower, which usually is the case. If you see a break in violation of the previous structure right here, then that can give you a clue that, hey, you know, the markets are definitely shifting. But We call this invalidation, just like Stuart mentioned. Invalidation. That is what we call it. So, yeah, this is what we call an invalidation level. Good job, Stuart. Invalidation. So, this will invalidate the buy if you see a break and close below this level. But for the most part, we're expecting this area or this zone to hold momentum to be to the upside. And it seems like this may be an issue, continued issue with these banks and a lack of credit, and the problems that happen during a high interest rate environment. So who knows? We could continue to see the dollar benefit from this bad news. So from here, we see price correct into this zone of support or demand, and from here we're looking for a buy opportunity, and we could trade this to the highs, or we could shoot for extended targets. There's really not much barriers or interference until we reach up into this zone right here. So then there's a possibility for you to extend this move all the way up to this area right around here. But to play it safe, you can just take your profit right at the highs, or at least take partial profit, and then have a floating target to where you could, trail your stop and close out your trade right up here. So then that's something you can do as well. But yeah, we're looking to buy US dollar, Swiss franc. I think that's pretty apparent for this pair with the way momentum is moving. All right. So, all right. Are there any questions about the US dollar, Swiss franc? Probably not. Remember, those three currencies, the euro, the pound, the Swiss franc, has been affected due to the issues involving Credit Suisse. So we'll see what happens. Now, let's go and let's do maybe one or two more. Oh, well, yeah. Did you have anything you wanted to share, Marvin? I guess we could.
But you can just hurry up.
Okay. Well, yeah, I'm just going to do maybe one more euro yen. Euro yen massively fell off. Remember, the yen is benefiting from all this risk aversion and uncertainty. So people are piling into the yen. Why? Because of their bond market. That's the reason why. But we can see that price is selling off on euro yen. Yeah, risk aversion because of the Japanese yen bond market. That's the reason why it acts as a safe haven. But we can see here that price did sell to the downside, drop to the downside. Had a very strong move, and yeah, right now we don't want to fight against what's happening with momentum. We don't want to pick a top or bottom, especially when you have this strong sell-off in this pair. We want to look for opportunities to really sell this pair on a dip in price. So what do? Well, we identify the area. So we see here another area of imbalance or inefficiency right here. So we can just add that right here. Just call this imbalance, inefficiency right here. So then somewhere within this area, we can see price come up to. And it actually coincides with structure. Look left, structure leaves clues. Let's drop a horizontal line right here. We see that we have structure right in this area right here. We could see that on a few occasions. Price came, tested this area as resistance right here on this pullback, and then support right here, and then support right here. So then this level or this zone could be a good zone where we could see potential sellers come in. So, we just want to be aware of that. But we're looking for opportunities to sell euro yen. If you even drop down to the 4-hour chart, you can clearly see that momentum is to the downside. It's without question. We need to look for opportunities to sell. Let me go to the daily. And yeah, need to look for opportunities to sell. Of course, we do see daily structure. We can draw that in as well. Look left, structure leaves clues. We do see this daily zone of structure right around here. So we definitely have to be on the lookout for any type of bounce or reversal in price. But that's what we want to see. We want to see price bounce and give us an opportunity to exploit this move lower, to take advantage of momentum at the moment. But yeah, we're simply waiting for price to correct into this area of inefficiency where we have structure. Look left, structure leaves clues into this area. And then from there, we want to look for an opportunity to sell this pair, maybe down into this zone. We can get a deeper push into this zone, but yeah, we'll be looking for an opportunity to sell. Now, of course, some of you guys may be wondering, hey Melvin, what about the invalidation? How would you identify the invalidation for this particular pair? And that's a good question to pretty much ask, because this is where it gets difficult. When you have these strong moves to the downside, it can get quite difficult to really determine where your invalidation zone would be. But I'll share more details in a little bit, but this is where it would be. Let me just draw it in. We will stop looking for sales on this pullback or correction if price pulls back and if it breaks this level right here. This will be our invalidation level right here. So we get a break and close above this area, then what we can typically expect is for this area right here to act as support. Price may come down, test this area as support, and then you guys know what will happen, or what could potentially happen. Price could bounce from there and head higher. So that's something that could potentially happen, but for the most part, we're only looking for sales. So as soon as price hits the zone, we're going to look for that bearish conviction, and if it breaks above it, we're still good. But yeah, this is the euro yen, and that's it. So yeah, what I'm going to do, I'm going to take a small break right now. I know in 1 minute we do have retail sales, so we can definitely take a peek at that. I don't know, Marvin, if you wanted to talk about that. I do have a few setups that I want to share, but I'll do it after Marvin gets done talking about the fundamentals and all the good stuff involving the intermarket stuff that's going on. So yep, here's Marvin right here. All right, so yeah, just like we said before, like there's really a lot going on, and it's going to be kind of difficult for me to cover everything as far as what's happening in the macro backdrop. Fundamentally, I'm going to try to do my best to sort of share what's going on, but of course in 1 minute we do have the US retail sales report coming out, and I know I posted in the group. That was the reason why I posted it, because I knew I probably wouldn't have enough time to really cover it. But on last week, we did get the MasterCard spending pulse data coming out, showing that U.S. retail sales is going to increase. And it's increasing, or it's still remaining firm, even in the midst of a rising interest rate environment, and also during the time when pricing pressures are still entrenched in the market. So, of course, all eyes are going to be on what the U.S. retail sales is going to be, because that will play a part in sort of helping the Fed to determine what they need to do. But I think right now, considering the news this morning, it's going to be a no-brainer that the Fed may have to sort of slow down the pace of rate hikes and actually go for just only a small 25 basis point rate hike, considering what we see happening across the bond in the Eurozone, with Credit Suisse Bank today on the verge of teetering and collapsing. So then I think with that being staying in mind, I think the Fed is going to actually keep their rate hike at 25 basis points for the month of March, and possibly moving forward. And I know Fed Funds Futures has implied that as well, that we'll see that. But of course, with the news coming out today, this would mean that the Fed would have to dance delicately and thread the needle delicately, because we see now that the financial system is pretty sensitive and fragile. But let's go to our calendar real quick, so we can see what did the report come out as. So then what I'm going to do, we're going to go to our calendar, and let me just do this real quick. I know we like to go to investing.com, so let's do that. Go to investing.com just to see what did they report retail sales as. So let's scroll down. We can see here come out. We had PI data come out. I know yesterday we did have CPI. You guys know that CPI, the headline figure, remained the same on yesterday. So inflation on an annual basis remained the same, but we did see a pickup in that core reading of 0.5% on yesterday. So then today we have the PPI, which is more so, wholesale prices on the supply side. And we can see here that on there year to year, we see an inflation sort of pulling back. It came in at 4.4%, which is lower than the forecast. On a month-to-month basis, the headline number came, was unchanged. We didn't see any change. So then this could be a good sign, as far as for wholesale prices on supplier end. But yeah, like, of course, PPI is important, but really the most important thing is how is inflation impacting consumers. So then, we look at CPI as a more stronger gauge on what the Fed would do. The Fed would look at that along with core PCE data, just personal consumption expenditure data, to sort of determine what they should do with their monetary policy. Should they hike rates? Should they lower rates? Should they tighten the monetary supply? So then, of course, right here, we can keep this in mind that PPI is pulling back. We are seeing some softening in PPI. That's pretty much what the Fed wants. And, this could sort of play a small role in sort of, influencing what the Fed decides to do. But I don't know. I know right now we see the retail sales numbers that came in for February shows that retail sales fell. It came in at 5.39%. It fell to it fell 0.4% month over month in February. So this is really much different than what the MasterCard spending pulse data reported. They report inflation to stay pretty firm at 6.9%, but we can see that it dropped. But what's interesting is that we see an upward revision to last month's retail sales numbers. It went from 6.38 to now 7.68%. As far as the level of retail sales on last month in January. So then, we're not out of the clear yet. Retail sales is still pretty firm. It's still pretty strong considering that we've been in this interest rate hiking regime like over a year, and that we see, inflation still sort of firm. We're not nowhere near the Fed's preferred target of 2% inflation. So then, yes, pretty much the data for today is fairly mixed. It's kind of hard to say how the market's going to open with this, but when we look at this data, we got to see, okay, how's the market responding at the moment? Like, what's going on with the dollar? So then let's go back to our chart. We can go back to see what's happening in our chart for the dollar. So then let's go to, let me just go to the Dixie. I know we haven't talked about that earlier. So then we can see here how upon this announcement, we did see some softness in the dollar. And I would like to also see how U.S. Treasury yields positioned themselves from this announcement. But yeah, we can see that the dollar sort of continue to sell off. Now, this could just simply be, a continuation of a much needed retracement or correction ahead of further gains to the upside. There's an argument in case for that, since it's sort of testing the lows down here, this area of structure, which is where the buyers have come in before, and we could see price or the dollar retest the highs up here again. But one thing we do know is that the initial knee-jerk response to today's announcement is that we did see some dollar weakness. So then that's interesting to see, but really it doesn't, the data today doesn't really tell us anything too much. We know that right now the market is focused on what we see happening in the banking sector. There's fears and concerns of possibly further run on the banks and bank runs. So then right now we're going to see some risk aversion. Flight to safety is taking over. and we should see a rotation back into the dollar as still the world's reserve currency, and that's still the preferred safe haven. And just like my brother said, the yen has benefited the most. I know on this yen equally weighted index, if we look to the right, we can see that it's moved about 8%. But let me just go to our watch list for currencies. And I'm going to go to the yen crosses, because if you go to, these are our major yen crosses right here. You can see that all of them are trading to the downside, which means that there's strong buying in the Japanese yen, simply at, in safe haven, flight to safety buying. So if you're going to look for a pair to trade, if you want to know directional bias, then one thing that's clear is that the yen crosses are selling off. All of them are. This whole group, all of them are selling off as risk aversion is setting in. And just like my brother said, the Japanese yen is the preferred safe haven, not only because of its strong bond market, but it also has a low yield. It's only one of the only few central banks that hasn't hiked. So whenever there's risk in the market and fear and concern, you want to go from a high yielding asset to more of a low yielding asset to sort of insulate yourself from any heavy losses that can come. So then this is why the Japanese yen is the preferred safe haven at the moment, and it's selling off. But we see also the dollar benefiting from this risk aversion as well. So let me just do this real quick. Let's go to our favorite site. I know we haven't been there in a while, or let's see, we're gonna go to FinViz right here, financial visualization, and we're gonna look to see what is our heat maps telling us for today. So we can go to the futures heat map right here, and as you can see, a whole sea of red. You can see that across different assets we're seeing a sell-off. Now, this is not a good vote of confidence when it comes to growth. We're not only seeing a sell-off in the equity space and equity future indices, like across the board, global equity future indices are being hit, because now we're seeing signs of contagion. What happened, or what started in the US, we see the same scenario play out in the Eurozone with Credit Suisse. So then there's fears of contagion. We see this this contagion spread and impact other asset classes as well. We see oil selling off. Oil has been selling off for a while. It's been getting lower, and I think it's probably tested or even breaking that low from December 9th. I know we're going to look into it in a little bit, but it's testing the lows. I know it's at $70.25. And this is the continuous contract of oil futures. But we can see here how oil, the energy market, has been getting hit due to lower, weaker oil demand. And some of the oil weakness could be due to some drilling projects that I know the Biden administration did confirm or approve of, where ConocoPhillips, which is a energy company, is going to shore up the natural petroleum reserves, and there's going to work on more drilling and actually pumping about 600 million barrels of oil over the next 30 years, an additional 600 million barrels for the national petroleum reserve. So some of this sell-off in oil could be due to that, and anticipation of that. But I think, to be honest with you, what this sell-off in oil tells us, or in energy products tell us, is that the market is not in a good place, because crude oil prices, or crude oil demand, has a 0.93%, or I should say 0.93 positive correlation with global GDP, or global growth. So then we can look at the energy market as a harbinger, or sort of like a canary in the coal mine of what global growth would turn out to be. And as you can see, it's been selling off. Let me just go here real quick, since we don't have time to go to our charts on TradingView. Let me just look at it here. And we can see that it is testing the lows down here. If this gains any more momentum, like, it's going to definitely collapse, because it's been in consolidation for a few months. Oil has been hard to trade because it's been locked into a range, but it seems as if it's about to break and close below this 70 80 zone. And if it does, then we can expect more aggressive price moves to the downside as volatility surges and picks up, and we see oil rapidly decline. It's been holding and defending this support, this floor, for some time around 70, 80, 70, around that area, but it seems as if right now it doesn't want to support it, like it's testing it, so it may end up falling and collapsing lower. So then this could be a sign or like a harbinger, a canary in the coal mine, that we're going to see a reversal in global growth, because just like I said before, the energy markets has a positive correlation to global growth, and if whenever we do see oil prices fall, that means GDP globally is going to fall as well. Global demand is going to fall. So then, yeah, but I think that's it. Let me see. Okay, what else? We see some of our soft commodities sell off. We see Dr. Copper right here selling off as well, which is letting us know that this could be a sign that a lot of our industrial production, manufacturing production could be at one point or at some point sensing some type of a weakness or a pullback or a slowdown in the manufacturing sector. So then we see copper, Dr. Copper selling off. The only thing that's holding on to gains as a good store of value during times of market uncertainty or slowdown, we see the yellow metal right here, gold, and we see silver. These two precious metals are benefiting whenever there's signs of recession or global slowdown. Whenever we see a run on the banks, we usually see these precious metals serve as a good store of value, a rush into gold. Whenever traders or investors aren't really too confident in cash or in currencies for a particular time. So then, yeah, so we see this happening. This red commodities are selling off, but let's see what the Forex heat map tells us real quick. And we can see it's sort of like the same thing in the Forex heat map. We see massive risk aversion. The Japanese yen is the strongest for today, followed by the US dollar. And what's interesting is the Aussie is holding up as it's selling off too, but it's holding up as it's not a laggard for today. It's holding up as one of the stronger currencies among the majors. But you can see here how the euro is selling off the most, followed by the Swiss franc and followed by the British pound. You can see that this is pretty much localized to the European currencies. We see these European currencies right here that are pretty much close neighbors and tied to one another. We're seeing them suffer the most as this issue with Credit Suisse impacts them more. They're more impacted by that news. So then, yeah, we see the euro is the weakest for today. And let's go to the crypto space. And we see the crypto markets are fairly neutral at the moment. I think Bitcoin is positive, but we can see that the crypto market it's interesting that it's stabilizing, but when we do see a good majority of the majors sell off, like Litecoin, Ripple, and Bitcoin Cash. So yeah, so today's going to be another interesting day. I think right now I believe this is going to be a year of just volatility, push and pull dynamics in the market. This tug of war, this tug and pull and push dynamic that we're going to see among asset classes across the board. So then we got to know how to trade in these environments. And one of the best ways, or if you need to sort of adjust your trading strategy, then I know for us, we've been adopting a more scalping strategy. So then I know that's what we're going to pretty much, talk about during our private war room, this scalping strategy that we can take advantage of during times when we don't see that sustained movement, because there's so much push and pull in the market that we can just utilize opportunities to get in and get out of trades. But yeah, like I just kind of wanted to put that in there for those of you guys that are new to Forex Anatomy. We thank you guys for joining, and yeah, hopefully you can definitely become a subscribing member. So yeah, but yeah, I'm gonna move on from that, and we're gonna go back to the chart, and I'm gonna have Melvin sort of take over from here. He's gonna pretty much share what's going on and review some price moves. All right, guys. So yeah, I guess Marvin did a decent solid job explaining everything, but if you guys don't understand certain things, just let us know. We do have the chat area where you could answer any questions that you may have. We are more than willing to answer those questions for you. But what I'm going to do right now, I think I was at the euro yen before. We talked about this potential pullback in price. We see price testing this zone right now, which is probably what we wanted anyways, but we're waiting for a nice solid correction at least. And we may be able to take advantage of a buy, even though we're looking for sales. If you know what to look for, you can trade a counter trade move. The reason why is because price is hitting this area of daily structure support or daily demand, whatever you want to call it, and stochastics is oversold. When you see those two conditions, there's a possibility you can exploit a solid move to the upside. So I'm not going to take too much time talking about that today, but just be aware that we are touching this important zone of value, and there's a possibility we could see price consolidate in this zone and give us an opportunity to buy. There's that possibility. So we'll see what happens, but you got to be prepared for whatever comes. You got to be willing to be fluid and adapt to whatever the market is giving you. All right. Okay. So yeah, let me just get through these setups really quick. So the next momentum setup was pound yen, and pretty obvious. Same thing. Yen is benefiting because of risk aversion. Pound is selling off because of the issues that they're having in their connection and tie to Credit Suisse. So from here, we're just simply looking for a pullback in price. We're just waiting for price to correct. I know this is a 4-hour demand zone, but yeah, I'll come back to this later. But anyways, what we want to do from here, we know that, of course, 1 hour is bearish, 4-hour is looking bearish now, and daily is looking like it may want to turn to the downside. So we definitely want to stay on the side of selling. That's where all the momentum is right now. We want to look for opportunities to sell, and it's very similar to what we saw before with the other pairs. We have this area of imbalance or inefficiency right here that could be tagged or tapped. In this area right here where we had the strong volume candle pushed to the downside, we had structure to the left, look left, structure leaves clues. So it's the same thing, the same trading scenario. Just pick a pair and then just stick with it for the most part, because on all these we're looking for sales. We're looking for price to return to this area of structure. Remember, look left, structure leaves clues, support here, support there, support right here. We had this zone of hesitation or hidden demand at one point, which is now hidden supply here. And we have multiple reasons to assume that price could potentially reverse if we see this level or area tested. So again, what we're going to do is wait for price to come to us, and we'll look for an opportunity to sell on this pullback in price once price reaches this particular zone right here. So in the same way, what we talked about before, we see stochastics is oversold, so we may be able to take advantage of a quick buy before we even look for this sell. That's just something for you guys to know. If you go down to, well, let me do the daily first. Well, yeah, this is the daily chart. We do have this daily zone of demand right here. In this area right here, you could say. Daily demand. So, price could actually come down to this zone and respect it. We could get a deeper push lower, so that price could sort of pierce or penetrate these lows down here, which let me do something. I'm going to expand this out because we do have this area right here of demand as well. We can just group these two together. So yeah, price is currently testing an area of demand. It's oversold on the 1 hour, but it's overbought or coming from overbought on the 4 hour. So this thing can actually go lower and push deeper into this daily zone. But there's a possibility that we could see buyers come in now. So then just be prepared for anything. Remember, in trading, you have to be fluid and not static. So let's just add this right here so we could have this potential sell on pound yen, and you guys know what to do from there. But yeah, we have pound yen and we have Swiss franc Japanese yen as well. So look for setups on those particular pairs as well. Euro yen, pound yen, and Swiss franc Japanese yen. And same thing imbalance or inefficiency right here, the same thing. And then structure, look left, structure leaves clues. Where is structure? Well, we can say it's right there, right here. Multiple times this level was tested multiple times, right here, right here, right here, right here, right here. And we can see this area tested again in the very near future. So same thing, nothing different with all these pairs. Now, what I'm going to do now is go to a pair where we're going to do some top-down analysis, and it's going to show you how you should plan for your trades. Because sometimes you want to plan with multiple scenarios in mind, multiple possibilities within your playbook for that particular currency that you're looking at. So with that said, what I'm going to do is go to pound Aussie. I believe we were here the last time we met. I believe we came to it. So let's go to the daily. Let's go to pound Aussie right here. All right, and really we can go with the weekly because I think that's where we started off before. Okay, so right here on the weekly, what we can see here is that price expanded to the upside. We had this correction and price gave us this weekly expansion higher into this area of daily structure resistance, or supply, whatever you want to call it. But we see a reaction to this level right here, and as I mentioned before, price could correct lower just to make another attempt to push above these highs. That's a possibility, mainly due to how price typically moves. And if you were to take a measured move of this last impulsive wave to the upside, if you were to take a measured move from here to here, and you take this line and add it to this low right here, what we could potentially see is an expansion to the upside, or at least a test of these highs up here. So then that's something that you definitely want to pay attention to, the potential rally into this potential area of supply if we do see that one-to-one measured move fulfilled. So then there's a possibility we could see this happening. So yeah, we got that on the weekly, but what we see right now is this reaction to this particular area right here. So there's a possibility we could exploit a sell opportunity. And if we drop down to the daily chart, what we could see even on the daily chart is this ABC move into this area of supply. A, B, C. C is overbought at an area of resistance or supply. We can definitely look for an opportunity to sell. So again, we have more clarity that we could be looking for an opportunity to sell. How? Because of this sideways moving price action. We can see that for the past few days, price has been really moving, or it's been held within the range. This green bar right here to the left is what we call a mother bar, right? A mother bar. This green or Cyan, you guys get the point. But this is what we call the mother bar. And price will have to break below the low of this mother bar before we could look for, be before we could say, hey, the bears are taking control. We have bearish conviction, and we could see a deeper correction all the way into this area of demand down here. So dropping down on the 4-hour, what do we see? Okay, so right now price is on a 4-hour, and it looks like it's on a 4-hour. It seems like it's having a difficult time breaking through this zone of support or structure, even on the 4-hour. Let me draw in, because we have all these wicks right here. These wicks. You see these pin bar type candles? This tells you where the buyers are. So we know that this is an area of demand. This is a zone of structure or area of demand. And we need to wait for price to break this entire zone before we can commit to really selling. But what we see here is price doing what? When price hit this zone, this 4-hour structure, 4-hour demand zone, you could say, where the candle is moving up, where they're moving down, or where they're moving sideways. And if you look with the naked eye, I think you guys will know the truth, right? Price was moving more sideways than anything, right? So what we want to do is pay attention to that, because what we can assume from here is what could be possibly taking place on a smaller time frame. We see that price tested this area of 4-hour demand or structure. We have, price, every time it hits it, it rejects this zone, hits it, rejects it, hits it, reject it. What could be taking place on a smaller time frame? Let me just ask you guys that question. On a smaller time frame, what could possibly be taking place in this area right here? Okay. Adam said consolidation. Marcus said a reversal in momentum. Ariel said a reversal. And yes, all of you are correct. A potential reversal could be happening. Consolidation, bottoming, and a potential reversal. So yes, you guys are correct. And if you go down to the 1-hour time frame, what we see is a potential bottoming type setup where let me delete this for now, and I can remove this right now. But what we see is the possibility for price to break and expand to the upside. But in order for us to be confident that the bulls are really taking control, okay, let me delete that. All these alerts coming out right now all of a sudden. We really need to see price break and crack this level to the upside. That would give us more confirmation that we're seeing a bullish rotation. And once we see that breaking close to the upside, then we can just wait for the dip in price. So wait for price to crack, break this neckline to the upside, and then just wait for the pullback, and then you can just trade a nice move up to these highs right here, up to this area, up to these highs, where you can then look for an opportunity to buy, right? Yeah, well, yeah, we'll be looking to buy here and then looking for potential sales if we get a retest up here, the possibility of one. But our assumption is that price may go all the way up to that zone that we identified on the weekly. So then that's something that we need to bear in mind. But yes, this is really plan B. Plan A from the start was to wait for a break of the zone, pull back, and look for that sell. And we can sell to this next area of demand down here. That's plan A. But we need to be able and be willing to adjust and adapt. We need to be fluid. We need to be like water, like Bruce Lee said, like water. Fluid, adapt to whatever the market is throwing at us. So in this case, we need to wait for price to break and expand to the upside, wait for that pullback, and then look for a buy. But if price continues breaking to the downside, We'll wait for the pullback, wait for a sell. So we'll be ready in either scenario, in either case. Now, this is for those who are day trading and swing trading. If you're scalping, you can always take advantage of these small micro moves in price. You know, within this consolidation on a 1 hour are micro moves on a 5 minute, and you can take advantage of those nice solid moves in price. So then that's the benefit of scalping, especially when there's indecision in the market. When there's indecision in the market, you can scalp these moves and make some decent money. But if you're the day trader, swing trader, just wait for price to break and confirm sentiment in a particular direction. All right. Yep. Okay. Yep. Just like Marcus said. Yep. Yeah, I just saw your notice or your post. A trader could also scalp the possible movement upwards. Exactly. And then take the sell as far as a day trade. Yeah, exactly. He can potentially scalp this move to the upside. And you could see clear signs of that on a smaller time frame, on a 5 minute. Of course, scalp it all the way up to these highs right here, or this neckline of this bottoming consolidation pattern. And then from there, pause and wait to see what price does, because we may be able to exploit another move to the downside. But if price breaks to the upside, of course, you know, we can look for the opportunity to scalp that move and then scalp the correction. But right here, when price pulls back, we can look for that nice day trading setup. And then you can enter your buy on this dip in price. Let me do it right here. This dip in price right here. Enter our buy right here at this point. And then we can trade this move to the upside while at the same time scalping this move to the upside as well. So then that's the benefit of really scalping. You can really thrive in any market environment. That's the reason why I like it. But this is a day trading setup right here overall, but you can find opportunities to definitely scalp these particular moves in turns in price. All right. So yeah, are there any questions about the pound Aussie? If not, then what we can do is close out. I know we want to open up the war room, the private war room for those who are interested in coming. We highly recommend that you come because we're going to give you guys more details in regards to scalping the markets. So we definitely want to do that. What we're going to do, we're going to shoot for the same time as last time, which is around 11, I believe. Eastern? Yeah, 11 Eastern, which will give us, what, 2 hours from now, right? Yep. 2 hours from now, we'll be in the war room and we'll be talking about scalps, and who knows, we'll probably be looking at some scalping opportunities, executing some scalping opportunities. Who knows? But yes, we're going to open up that room for those who do want to come and join us and learn more about how we're scalping the market successfully. So with that said, thank you guys so much for coming. We really do appreciate you guys. Thank you guys for joining us as a community. We have a lot in store for you guys. And like we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we would definitely talk to you guys soon. Stay blessed, stay encouraged, and we'll definitely see you guys later. Have a wonderful, blessed day. All right. Thank you guys so much for coming. Talk to you guys later. All right. Kidding. Bye.